one of your competitors is actually scarce, like Bitcoin is, then you're forever in trouble. It doesn't matter how much utility your chain has or what you can do with your token or whatever, it becomes working capital. You buy the token, you do your thing, like with Monero, you buy some Monero, you do your transaction, it acts as like a mixer or whatnot. But what do you do then? Well, you go back to Bitcoin because that's what you want to hold, because that's where the strong monetary properties are. If you're ever around the people who kind of work on the core implementation, you very quickly get a sense of how nonsensical that is. If you look at the flows that have come into US ETFs, they aren't that institutional. It is largely people, individuals buying it in their individual accounts. We still haven't seen huge amounts of pension funds or large institutional managers or discretionary managers. At the end of the day, it resolves back to the same thing, which is there demand for your token? If there's not demand for your token, there's no purchasing power. Much to talk about, nothing ever happens. So
nothing ever happened in Bitcoin. It's still the same old protocol. Happened. It still works. It's still boring like always.
Yeah, man. My node still works. Turn it on. It's on.
Nodes is a whole different topic at this point.
Yeah. We can talk about that too if you want.
It's crazy how should I say it? How controversial it is now, like what node you're running. 5 months ago, nobody cared. Like 5 months ago, or like maybe like half a year or like a year ago, you just said like, oh, I run a node. Now people ask you like, oh, what node are you running? I don't know how you observed it, but nobody ever asked me what implementation I run. Now I get asked like almost daily, Robin, what are you running? I'm like, I find it kind of hilarious.
It's like that meme from that Civil War movie. Do you see that movie where the guy goes, "Well, what kind of American are you?"
No, I haven't seen that.
You haven't seen that movie? It's an interesting movie. I think it's just called Civil War, and it's about like some fictional future where like California and Texas of all countries like band together to like oust the president. There's like a whole Civil War thing, but there's a scene there where there's like a mass grave or some like mass execution happening, and the movie is about following this group of photojournalists that go around documenting stuff, and they come to this like scene of an atrocity or wherever, and they're being threatened by soldiers, and they go, "Don't shoot, we're American." And the guy just goes, "Well, what kind of American are you?" And that's kind of how I'm feeling about this lately, which is also why my spidey sense is tingling a little bit, because I've seen this movie before, and this type of community splitting behavior, whether it's intentional or not, is always extremely suspicious to me. Don't like it.
Yeah, I think we can maybe directly start in with that. Is like, I mean, there are a lot of differences between, for example, the 2017 community splitting, because it was like an actual splitting on the consensus level. Now it's like a policy, but still, I mean, I kind of feel like the peak is over. Like I kind of feel like the peak of the traumatic thing is now kind of over. Maybe I'm wrong. Next week there's something weird happening, but like it feels like it gets a little bit more calm around that topic, and like people are calming down again and saying like, oh yeah, Bitcoin is still around. October is now here, and it's like we can focus again on like normal fundamental things that happen with Bitcoin, and we don't have to like fight on this. And I think I saw it today that the next version of Bitcoin Core even allows for like the normal up return limit if you set it. So I think they kind of made some move towards that. I'm not sure. I've just seen the headline.
I think they just undeprecated the filter policy setting. Yeah, even in 30, you could set the filter however you wanted, but there would come a deprecation flag on it, which just means that we intend to remove this in the future, which There's so much, nuance here that a lot of people are missing. I mean, they're missing out on, first of all, everything that people are discussing right now have been debated to death 15 years ago on Bitcoin Talk. And I would really urge everyone to go and read Bitcoin Talk, and, obey the Popescu rule, which is, when you're new or newish, the best thing to do is just to read and listen and learn before getting all caught up in like a bunch of like flag jostling and us versus stemming, and it's all very tiresome. This has all happened before. There's a lot of nuance here. A lot of the nuance has to do with how the protocol, when it came out, was just a jumbled mess. Everything was just in the same code base, and it still is. And there have been multiple people now working for years to. It's called the Great Consensus Cleanup. And it's basically a project to separate out the consensus code of Bitcoin and modularize the whole code base so that, it has a huge amount of benefits. It makes testing changes easier. If you know that a change is only going to affect one module, that's very interesting. You can choose not to have a GUI. Like, there's no reason why the GUI needs to be baked in with the consensus code. Policy filters arguably should be their own thing. They should be separate. They are separate from consensus, and they have nothing to do with consensus, right? And so, there should be probably a separate filter module or whatnot. All of this stuff is possible, and I think my take on, so the devs that I hang out with that work on this, what I'm getting in terms of my read on their take on things is that it's just baffled. They're baffled at how big of a deal this has become, and they don't really see it that way. It is interesting though. I mean, if you take it down a bunch of notches, like, everybody agrees that spam is ridiculous and everyone hates it and wants it to go away. And again, I urge everyone to go and just read Bitcoin Talk from literally 2010. This was debated to death already then. It is impossible to stop spam. It is functionally impossible. That doesn't mean that, we shouldn't do certain things to, make it harder or more annoying or whatnot. Like, okay, we can do that. But that too, everything is trade-offs. That too comes with costs. It does some bad things. It does some good things. It does some bad things. Having the option to do stuff is probably the best way to go. But people need to appreciate too that the more complicated the overall code base is, and the less modular it is, the harder it is to test things, and the harder it is to make sure that new proposed changes don't have unintended annoying consequences. So there's just so much to this, and there's very much limited amount of manpower that work on the code base, maintaining it, just the maintenance, right? Not even talking about like verifying new BIPs and testing them and doing all that. I'm talking about like fuzzing, like the unsexy but really important work of just finding critical vulnerabilities, of which there are many. There's been, I think I ran the math over the last 10 versions of core, there have been 1.7 critical vulnerabilities patched per upgrade. So people need to be aware of this too, and that when you run alternative implementations, you're piggybacking a lot on the ability of the larger core project to find issues and sort them out. But the tests that are done they are not the same code bases, right? So the tests that are done on one are not necessarily always applicable to the other. So you are opening yourself up to just, in my opinion, unnecessary amount of new risk, especially if you're running a lightning node, stuff like that. Then the whole like don't upgrade meme is probably not a good idea. But if you run a node that you just turn on every few months, resync to like check a UTXO that you have incoming or whatnot, then yeah, you're fine. But endless nuance, and what I really dislike about the kind of discussion that is happening right now is just how annoyingly heated it has become and how much fear mongering there is. And whenever people are trying to scare you into taking an action, your alarm bells should really start going off. I mean, we just went through COVID. Come on, people. Like, don't we remember? It was like 3 years ago. Or I guess 5 now. But yeah, fear mongering and sensationalism, and a lot of the language mirroring that is happening now with core being branded as an entity with like a unified set of goals and like malicious intent and stuff. It's just I've seen that movie before and it was not fun. So it's entirely unhelpful and very deeply suspicious to me when people start talking like that.
Do you see any like comparisons to what 2017 with the block size war happened?
100%, and that's why my suspicion sense is tingling, because it's about how you use language in a debate, and I get it. It's Twitter mostly, and it's not exactly the platform of nuance and calm discussion. And people are very passionate about this, and I understand that tempers can run hot, and there's name calling, and this, that, and the other. But the two biggest mirror images I'm seeing right now is how Roger back in the day would and his kind of cohort of people would do this thing where they talk about core as if it is an entity or an individual, like a super individual. And if you're ever around the people who kind of work on the core implementation, you very quickly get a sense of how nonsensical that is. That is just not how it all works. And there's no like hive mind going on there. It's just a bunch of individuals with different priorities, different intentions, and different political alignment that are working on something together in a messy and distributed way, but in a way that I actually think is quite solid for what it is. And that is not really something I would say about. I mean, the other implementations, like I'm not saying that that they don't know what they're doing or whatnot. It's just that the process is just very obviously not as strong, and it's just a manpower and resource issue, probably more than anything. But there are a lot more resources on the other side, and because of that, the process is a lot better and safer. And people need to think about that as well. Again, depending on what you use your node for. But it's good that we have different implementations such that people can voice their disagreement and kind of take like a political stand or whatnot. I think that's positive. But let's not let this get so heated and fear mongered that it starts becoming like a political party thing. It's like, oh, which side of Bitcoin are you on? Are you on this side or on that side? It's like, okay.
I get that. And I think actually I saw that while I was scrolling through your Twitter. I can bring that up with, gosh, I have to make this big first. This was really, I think, was also going into my mind a lot. And I love that it came from Nick Szabo. And he was kind of saying, yeah, I shared the right one. He's kind of saying it's really not that big of a deal. Calm down. And I love you like to everyone regarding everything. But yeah, especially also that debate of like, it is, people make it a bigger thing and they're saying like, oh, like we have to save Bitcoin, or we like this is like a huge thing and like this is the biggest thing ever. Like,
yeah, if you run core, Bitcoin's gonna die. Like, guys, like, chill. But again, I get it. Bitcoin's important. People are passionate. I get it. You don't want anything bad to happen. I get it. Just be aware out there. Whenever people desperately want you to take on a view or an opinion, you should be suspicious. Just come to your own conclusions. Do some reading. Go on Bitcoin Talk. Do it. Like, I don't think enough people read that forum. There's a lot to learn about this, and this type of like sensationalism of if you do this, then the world's gonna blow up, and it's just not the case. Everyone needs to take some chill pills and get back to remembering that we have outside enemies that are very much wanting to destroy everything, and that's what we should be focusing on, the adversarial thinking part. Yeah, it's Twitter, stupid sometimes.
Yeah, and it kind of distracts of what else is kind of going on. I think as you said in the beginning, it's like nothing is ever going on in Bitcoin, but there's a lot going on always in Bitcoin. So like nothing is really changing, but like everything is changing all the time, kind of a thing. What have you kind of noticed? What is kind of like for you noteworthy? I think you've been on about a year ago, because it was also around like Bitcoin Amsterdam, like last year. So like it's probably been about a year since you have been on last time. What have you noticed the last year? What happened in Bitcoin? What you kind of looking at? Like that's interesting, or that's like an interesting like development within Bitcoin.
The maturation of the markets that have happened. Probably the biggest two things that have happened, in my opinion, are obviously the huge proliferation of Bitcoin treasury companies. But the other kind of silent, or more silent, but hugely influential thing that has happened is the growth of the options market on top of IBIT. And how much volatility it has sucked out of Bitcoin. And I think a lot of that volatility has been transferred over into the Bitcoin treasury space as well, where a lot of the speculative demand has gone. And if you look at the type of volatility that those companies are seeing, it's reminiscent of early days Bitcoin. Huge ups, huge downs. Meanwhile, Bitcoin itself now is almost becoming a bit boring, with annualized volatility coming down into the ranges of a lot more traditional asset classes. And if that continues, then maybe that is the death of the cycles that we've known over the years, with 70, 80, 90% corrections happening from time to time. Who knows? Maybe that's over now. Maybe the corrections that we're seeing now will be more like the ones that we have been seeing, which have been, 6 to 9 month, basically sideways crabbing, and 30 to 40% max drawdowns. Maybe that's the new reality. And I obviously think options have been hugely influential on this, and also the treasury companies, because the treasury companies create demand for Bitcoin, then they go buy the Bitcoin, but then it sticks in there, and the downside volatility comes in their equity instead of in Bitcoin itself, and they just hold on to it. They don't sell it on the go, as normal people would do, or the kind of speculative crowd would do. So that has been a very interesting trend for me.
I just debated with Brandon actually on a Twitter space like an hour ago. If the Bitcoin volatility will go up in terms in the coming years, and if we see those huge blow off tops again, because my theory is kind of that Bitcoin is getting bigger and bigger, and with it getting bigger, it kind of gets calmer, where we have less upwards and downwards volatility, unless in a currency that hyperinflates. So if we have like a hyperinflating currency, like obviously it has huge volatility. If we see like the volatility that gold had when the Deutschmark kind of hyperinflated, like it was huge, up and down, zigzag, huge, like changing. Outside of like hyperinflation, I have a hard time believing that Bitcoin has huge volatility in like real purchasing power going forward, like huge volatility compared to like what it had, not like to what compared to like, I don't know, like gold, like it will probably have a lot more volatility than gold going forward.
Yeah. And I think it's, but look at the volatility of gold right now. I mean, and it just shows what's possible too, even in a 20 trillion, or, 20s, I don't even know where it's at right now, probably mid 20s, $1 trillion asset. You could get a 40% rip in a year. I mean, that's crazy. But I agree with that take. I think as Bitcoin becomes bigger, obviously it gets harder to push around. But this is probably, I'm probably biased from my position in the market, but we a lot of what we do in the ETF space is we talk to larger institutional clients, and the drop in volatility is obvious positive for them, because a lot of what has put active managers kind of off of Bitcoin in the past has been the volatility. It's just something that it's not fun to have to explain to your clients when one of your positions takes like a 70% drawdown in a year. People don't love that. So, if we get annualized volatility down to, 30-ish type, 40-ish percent, I think that is hugely beneficial for the amount of flows that you could potentially unlock from the professional investment sector. Obviously, this has to go hand in hand with people feeling more comfortable with the asset class in general, and there being like regulation and whatnot. And here on the European side, we obviously have a lot of unhelpful intervention from various regulators that needs to be overcome first. But long term, I think it's incredibly positive for flows, because a lot of the flows that I think need to come into Bitcoin to sustain kind of like the adoption growth, right? Like you're talking about the real purchasing power growth, that has to come from adoption, not from the denominator going to zero, right? Bitcoin's at, 115,000 right now, but how much better off are you purchasing power wise versus the 69K blow off top in 2021? Probably not that much if you look at the expansion in the dollar supply during that time. So in order for us to get that real purchasing power growth, we need inflows. And where are the buckets of inflows that are still addressable but untapped going to come from? I think the professional investment space is obviously one of those huge buckets. But in order for us to get there, we actually need Bitcoin to get a little more boring. I wouldn't cry if we just get like 30% year-on-year growth for the rest of. I mean, who cares? That would be awesome. I mean, everybody loves like a good 200% year, but no one ever got poor from getting double-digit returns on anything every year. So.
And this is what I don't get. Like now, we have this October thing going on currently. We have like, oh, like October is here and like now it's going up like crazy. And I'm looking like today is literally the 1st October. This will be published on the 14th of October. So people like maybe the price doing really interesting stuff in October and we we kind of look like fools in hindsight. But just so people know, like we are currently recording on the 1st of October. In the past 12 months, Bitcoin has been up 84%. 84.26% currently at like $117.
Yeah.
This is absolutely mind-blowing how great this is. Imagine we have 84% the next 15 years. Like I don't want to even calculate where we are at. So like 84% CAGR is like absolutely mind-blowing good. And so
Even
as you
20.
said, like, exactly.
Yeah.
And that's why I don't understand why people currently are like, oh, like it feels like a bear market. Like why is Bitcoin not doing anything? Like, gosh, like we are 84% up like in the last 12 months. Like what else do you want? Like that, if you want more purchasing power, like go work, like earn more money. Like you probably don't have an savings problem. You probably have an income problem at that point.
Yeah, and look, if Bitcoin's going to come with lower returns like that because of lower volatility, you're also taking lower risk. It's like, okay, I mean, you weren't in Bitcoin in 2014 when it had 80% annualized volatility, right? That's when it was a lot riskier. So the people who got those returns, they were taking much bigger chances than people are who are getting in right now, in my opinion. So I don't think people obviously people always expect what has happened in the past to continue forever, and that's just not going to happen. And I'm also of the school of when too many people think a thing is going to happen, it probably won't happen. Like the 4-year cycles or October, knock on wood, looking good on day one. But yeah, I don't. Who knows? Just because something's traditionally a good month, September is traditionally a bad month, and it was really good.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
So
yeah, September was like 9% upwards move. That like it's crazy good. And then like today, October is coming, and the first day so far, like the first like 15 hours, what I can see, almost I would need to change it to the American one, but like in the first October in the European market, the first 15 hours, it's up at 3%. Nothing that I like go shout on the roofs, but like it's not bad for a day.
No, I mean you don't need a ton of 3% days in a year for it to be a great year.
One thing maybe on that note, I want to kind of get into is what are you generally seeing in Bitcoin? We always talk about like the cycle changing. We always talk about like what is there to come with Bitcoin. And I do feel like something is changing within Bitcoin with more money coming in, and also the types of people that come into Bitcoin change. So we had like in 2015, a very different investor group that bought Bitcoin than we have now in 2025, where we have a lot more like companies that buy Bitcoin, a lot more treasuries buy Bitcoin. We have ETFs with BlackRock, and a lot of different like investor base. And my theory kind of is like a different investor base changes how the demand side of the equation is playing out, and also the supply gets more and more like stable on that front.
Yeah, it flows into Bitcoin through investment products are quite sticky. Once they come in, they don't tend to leave. And that's something that we've seen over many years. Flows into our products are quite sticky. Flows into Grayscale were incredibly sticky. Well, bad example because you couldn't get out. But flows into other ETFs have also been really sticky. If you look at the cumulative US inflows, even when they've had, bad months or bad few months, I mean, the drawdown is like a few percent, and then it just continues going up. I think it's the same with treasury companies. They tend to buy, but they're probably unlikely to sell compared to traders or speculators. I think you're absolutely right that there are new people coming in. And this is also why I would very much welcome more professional flows, because professional allocators tend to take position sizes based on portfolio calculations that they've done. And they would then like to keep a certain percentage of that asset class in their portfolio, and they might rebalance as the value of that goes up and down, but they're very much less likely to panic sell or go in and trade in and out because they're very cost conscious. And I think as we get a professionalization of Bitcoin investors, the kind of massive swings that we've seen in the past are probably unlikely to happen.
It's super interesting. It is for me like George Boudin put it so great when he was on the podcast. He's like, Bitcoin developed from a speedboat to being an aircraft carrier, and it just like moves in a different way of like, if Bitcoin once goes towards one direction, it's harder to get it off that direction, and also it goes slower in that direction. And so like it just gets more stable, and I think that's just like such a great mental picture for me that makes sense of like where Bitcoin currently is.
Yeah, and another analogy that I like to use is you can picture it as a large pool of liquid, and the larger the pool gets, the longer it takes to fill it, the more you need to constantly fill it in order for it to get appreciably bigger in percentage size. And if you want to move it around, it's harder. It's easy to move a glass of water around. It's much harder to move a pool of water around, and the ocean is just going to do its own thing. So the bigger it gets, the less the more impervious it is to these kind of sentiment-driven, both up and down, high volatility moves. So hopefully, and like I said, I hope we get fewer of those in the future, because first of all, because it makes my job easier, right? My job is to sell Bitcoin to professional and institutional investors, and that's a hard job when you have a really volatile asset. We talk a lot about portfolio sizing and rebalancing as the antidote to that, but people also have to keep in mind that large portfolios require quite a lot of work in analysis, and people are inherently not looking to put super complicated, labor-intensive things into their portfolio if they can avoid it. So the steadier it is, and the smaller the volatility moves are. Obviously, no one's ever pissed off if something goes up too fast, but especially the downside volatility, if we can tame that a little bit and avoid these types of anything more than 50%, if we can avoid those types of drawdowns, I think that would be hugely impactful for our ability to get proper institutional flows. If you look at the flows that have come into US ETFs, they aren't that institutional. It is largely people, individuals buying it in their individual accounts. We still haven't seen huge amounts of pension funds or large institutional managers or discretionary managers that have come in and taken big positions. There's still very much a sliver of the overall Bitcoin supply held.
Interesting. You also mentioned something before we started recording about liquidity crisis in Bitcoin that you kind of want to address. What do you mean with that?
Yeah, there are these narratives in Bitcoin that that there's less and less Bitcoin available. And normally with these narratives, you'll see some graph presented either of coins on exchange dropping or amount of coins flowing into the older UTXO bands increasing. Not to rip on this report, because I thought it was an interesting report, but a Fidelity report came out, I think, a couple of weeks ago that was basically making the argument that there's an increasing tendency of illiquidity in Bitcoin, in that more and more Bitcoin are going into what they call illiquid bands, right? So, and for them, it was 7-year plus, and also all coins going on Bitcoin treasury balance sheet, which I agree with. Those coins going into the 7-year band and onto Bitcoin treasury company balance sheets are sticky. They're unlikely to come back into the supply, or more unlikely than other coins. But the problem I have with this narrative, which is the same problem I had with the narrative of coins are going off of exchange, and so eventually, apparently, you'll run out of coins, is that that's not what we observe. First of all, if the price of Bitcoin goes from 50K to 100K, the same amount of coins sitting on exchange provides double the dollar value liquidity. So if the amount of coins on exchange goes down by 10%, but the price goes up by 20%, then liquidity has gone up. And it's just important to get that context with us here, in that you can have fewer and fewer coins on exchange. And that doesn't mean that the availability of coins in terms of the value that people want to buy is going down. Because if you wanted to put 50K into Bitcoin 2 years ago, you'd get a Bitcoin. If you wanted to put 50K into Bitcoin today, you'll get 0.4. So the same amount of Bitcoin can provide a lot more value or purchasing power counted liquidity at higher prices. So long as prices go up more than coins are going out of the ongoing liquid supply, then liquidity is going up. And I just want to make sure that people don't get carried away with that narrative, because I see it a lot and I just don't think it's helpful.
Yeah, the supply shock narrative also, where I got that question actually asked because like I was in Prague and there are a lot of those street interviews asking people like, what do you think about that? And I got asked the question, I think twice or even 3 times from different people. What do you think about a coming supply shock? And I'm like, what even is a supply shock?
Yeah.
Like at some point, if Bitcoin rips high enough, I'm gonna buy a great house. If Bitcoin rips high enough, I'm gonna retire my mom. I'm retiring like the one uncle that always supported. Like if Bitcoin rips high enough, I will find interesting enough good reasons for me to sell some. So
exactly.
The supply shock for me is just like, yeah, there might be a point where Bitcoin really rips upwards. But that doesn't mean it's a supply shock. I don't know.
Yeah, it's nonsensical for me as well. If price goes up, liquidity. If price in real purchasing power terms goes up, then the liquidity available goes up by the same amount if you have the same amount of coins for sale. And so this whole like supply shock. I mean, and again, it's always supported by some, in the overall scheme of things, quite small trend of fewer coins being in the wallets of known exchanges, right? And we don't even have to get on to how much of a cat and mouse game that is of identifying addresses belonging to exchanges. I mean, that's a non-trivial game as well. And so that could be underreported for all we know. But just like we saw this summer, Bitcoin price above 100,000, some guy is like, listen, I have 80,000 Bitcoin. I'm like a billionaire now. I wanna risk off or whatever, however you want to view it. I want the things, right? I want the yacht and the mega house, and I just want those things. And someone else can have the Bitcoin. There's always Bitcoin available at the right price. It's only a price question. That's literally it. Any amount of Bitcoin is good enough to supply enough liquidity for everyone if you could divide it enough, so long as the price floats, right? Even if we had 1 Bitcoin to share, if you could divide it into small enough pieces and the price actually floats, there's always enough. There's never not enough. Price goes high enough, like you said, people think that, again, people should, it just flies in the face of Austrian economic theory, right? Where all prices are comparisons of ordinal rankings of wants of people, right? What do you want more? Do you want a nominal amount of Bitcoin or that giant house, right? Price of Bitcoin goes up, at some point the ranking flips, and then you trade the other way. That is just the way it is. Everyone who holds Bitcoin, I mean, money is only a measure for other things that we want. Like, no one's going to Scrooge McDuck their Bitcoin into some like pool that you can swim in or whatever. I mean, it's nice to have savings and liquidity sitting, but at the end of the day, people are creatures who want to live their life in a comfortable way. Like you said, at some point, yeah, you want to retire your mom if the price goes high enough. So there's always Bitcoin available. I don't like supply shock. I don't think that will ever happen. If anything happens to get the kind of like, God candle or whatever that they talk about, it will be a collapse in demand of the denominator, like you talked about, which is hyperinflation. It's just a collapse in demand for the alternative good that it's traded against, which is the US dollar. And yeah, maybe that is on the bingo card for the century, but I don't see it happening anytime soon.
And I think this is the meme of that just came to my mind. In 2020, Amazon ripped so high that Jeff Bezos retired and got checked.
Exactly. It's just the way it goes. There's enough Bitcoin.
100.
And there always will be. Yeah, there always will be. It's just a price question.
I 100% agree with that. By the way, like you mentioned, you bring individuals and like professionals into Bitcoin. Maybe I'm horrible with introducing my guests. I'm very sorry for that. But maybe for the few people that are wondering, like, oh, like what are you actually doing in Bitcoin? Maybe you can give us some overview of what you're actually doing.
Sure. Yeah. So I work for a company called CoinShares, which is a European asset manager. We sell Bitcoin. Not only Bitcoin, we sell crypto investment products. We're the largest digital asset manager in Europe. We have around $10 billion under management. And our oldest Bitcoin exchange traded product is 10 years this year. So we've been doing this for quite a long time. I've been with the company for 8.5 years now, actually. It's quite a long time. I work on the research side. So I work very closely with our institutional sales department. And basically what we do is that we talk to and educate institutional investors on Bitcoin and try to help them reach their investment goals using our products. So I get to talk quite a lot with investment professionals. And like you said earlier, what has changed in Bitcoin this year and last year has been last time this happened was at 2020, 2021, when you had like a grade change in, first of all, how just the tone of conversations. Conversations are very rarely dismissive these days. Back in the day, you got doors slammed in your face constantly. That is not really happening that much anymore. Then back in 2020, there were more doors open, but there were just a crazy lack of knowledge. And what we're seeing now is that not only are doors open, but people actually understand some things and they're asking deeper and deeper questions and are more and more knowledgeable. So we're seeing these like step changes in the memetic spread, if you will, of Bitcoin into the professional investment community. And I think largely what's holding things back in Europe, because Europe is always perpetually on the back foot with everything. It's very frustrating. But here on the European side is mostly regulatory hurdles. So, for example, I'll give you two examples that people may or may not be familiar with and understand, but it is not allowed for European investment managers running UCITS funds that are domiciled in Luxembourg or Ireland, which are where most of them are domiciled, to have Bitcoin in their funds. If it's domiciled in France or Germany or most other places, you can. But unfortunately, most funds are domiciled in one of those two countries. And the regulators there have said that no Bitcoin goes in UCITS funds, and most funds are UCITS. So this is very unfortunate, and it's a great hurdle that's put in front of us. Another thing is that, for example, in the private banking sector, it has been a matter of bank policy that isn't strictly mandated by the regulator, but it is encouraged by them. And not to get too conspiratorial, but it's likely that the industry has been told that the regulator would be happiest if it's done this way. And basically the outcome is that private banks have not been able to advise clients to put any type of crypto or Bitcoin in their portfolios that are managed by the bank. And in private banks, you can either manage your own portfolio or have a managed portfolio based on your goal. And so all private bank flows that have come into Bitcoin have come through what's called reverse solicitation, which is that the client has to come to the bank and ask, I want to put some Bitcoin in my portfolio. What should I do? And then they will help you, and they say, yes, you can use this product, or, on our platform, you can use these types of providers, or some of them have the ability for them to go out and buy like actual Bitcoin for them and hold them in custody with the institution, which is, actually quite an interesting solution. It doesn't make us any money, but, private banks like it that way. So if those two major barriers got removed, that would be a huge kind of dam bursting in terms of potential flows from both high net worth individuals and active managers in Europe. So, we can't do anything about that. We just have to wait. But in the meantime, we're out there talking, educating. There are a lot of managers out there that would really like to put this stuff in, and they're just sitting on the fence waiting, and in many cases buying things like MicroStrategy or Coinbase as imperfect proxies.
I wonder how many of those regulation hurdles there still are all across the world that are holding Bitcoin back, and how big of a change it will actually be, because I think they are I think there's a huge amount of capital that is just locked into not Bitcoin. So they cannot even get it into Bitcoin because they are locked by some weird regulation thing, some weird hurdle. One of them that you just described, they're like, they have to go to an imperfect solution like Strategy or Coinbase to get exposure. And what happens if all those regulation hurdles slowly get removed, so everything can just like directly flow towards Bitcoin?
Yeah, I mean, I think we all know what will happen. The flows are going to intensify, and purchasing power is going to go up. Even in the US, there still hasn't been a proper ability for people to put Bitcoin ETFs in their 401ks. And the US 401k bucket is an enormous bucket of investment money that, probably should take, Bitcoin should probably be able to take, 4 or 5% of that over time, at least. And it's the same here in Europe. Pension funds here. I don't have a full view of every country here on how people manage their pensions, but here in the UK, for example, you can use that as an example. Having Bitcoin derivatives in your self-invested pension has been banned by the FCA since 2021, and that ban is getting lifted actually next week, finally. So that'll be an interesting time. It'll be an interesting time for us here as a company to see what kind of flows can come from the UK investment community. So slowly, a lot of these hurdles are getting just chopped away at. And I think over time, they will go away. I think the limit on UCITS funds here in Europe at some point will disappear. They probably won't be allowed to hold as much as they want. From what I saw, the recommendation that has been put in front of ESMA is that there should be a 10% so-called trash bucket allowable in UCITS funds, which would mean that these funds would be able to hold up to 10%, for example, Bitcoin. But even 10% is an enormous amount of untapped potential flow.
Yeah, it's crazy. And I have, because I just talked, the last episode was with Jesse Myers, and so having him on and explaining again of like how much money there is in the world, and it's like how little money there is now in Bitcoin. It kind of opens your mind to saying like how huge this opportunity of Bitcoin really is to what's there to come. one thing I've noted down, like I actually wanted to start with that, but like we're all almost in the end on let's get now to it. You mentioned the Monero thing. I don't know exactly what happened there, as I usually only focus on just Bitcoin. But you mentioned there's like an interesting thing happening that kind of showed you the power of Bitcoin.
Yeah, so it comes back to the discussion that flares up in Bitcoin from time to time about what are we going to do, or do we need to do anything when the block subsidy runs out? And there's this, again, go back to Bitcoin Talk, this debate has been raging for now almost 20 years. There's the school of thought that suggests that we're at huge risk when the block subsidy runs out, because relying on fees is just something that we can hope. We don't know that there's going to be a reliable stream of money for miners to construct blocks. And so some people suggest perpetual inflation or tail emission as the solution to that, basically saying that, every year we'll emit, X amount of Bitcoin in perpetuity just to cover revenue for miners. And the only reason I find this Monero happening interesting is because it actually relates to this, and I think it shows us an interesting lesson about this whole debate. And so Monero has perpetual block inflation. So every Monero block gives a guaranteed amount of miner reward in perpetuity forever, right? And my argument in all of this has always been that perpetual inflation is not a guarantee. It's not even a better solution than letting the market decide, because at the end of the day, it resolves back to the same thing, which is there demand for your token? If there's not demand for your token, there's no purchasing power available for miners to actually pay for the external resource that they need to mine in order to keep things censorship resistant and to give actual settlement assurance to transactors. And so this Monero thing is very enlightening, because even though they have this perpetual inflation, the Monero unit is worth so little that they were still successfully 51% attacked repeatedly, over and over again. It happened many times. And so my whole argument here is that this should be a lesson that perpetual inflation does not solve your problem, because if you are eroding at the monetary properties of the unit, then it doesn't matter how many units you give out to miners. The only thing that matters is that the unit is actually worth something. And for it to be worth something, it has to have strong monetary properties. And perpetual inflation is not a strong monetary property, especially if one of your competitors don't have it. If one of your competitors is actually scarce, like Bitcoin is, then you're forever in trouble. Even doesn't matter how much utility your chain has or what you can do with your token or whatever, it becomes working capital. You buy the token, you do your thing, like with Monero, it's a privacy token, right? You buy some Monero, you do your transaction, it acts as like a mixer or whatnot. But what do you do then? Well, you go back to Bitcoin because that's what you want to hold, because that's where the strong monetary properties are. So to me, this is just a very clear lesson for us not to get carried away with this idea that just adding more units onto blocks forever is somehow going to solve this like long-term security problem that we supposedly have. It won't. It's no better than leaving it to the market. It's a market problem at the end of the day, no matter how you look at it. Either there's a market for fees or there isn't. You can't predict it. There's nothing you can do. It's not an engineering problem. It's a market outcome. And if there's no demand for fees, to me, that is the same exact outcome as there's no demand for Bitcoin. If people don't want Bitcoin, then the price is going to zero. If people don't want to transact, that means that Bitcoin's not very useful. It's the same exact, the Venn diagrams of the risk of no fee demand and no Bitcoin demand is almost 100% overlap, in my opinion. So I thought that was an interesting lesson to learn.
This is super interesting because I think there is so much that a lot of people, especially in crypto outside of Bitcoin, don't understand what it really takes for how important it is that the token itself has a huge value in order that the network also has a value. I mean, maybe something that Bitcoiners need to learn, like there's Bitcoin the asset and Bitcoin the network. And Bitcoin the asset gives the network value. And I think what also like the big bloggers kind of wanted of like, oh yeah, let's just like and this is an interesting one because I think most of the value is in the store of value of the token, of the asset itself. And the use case or the total market, a total addressable market for medium of exchange is a lot smaller. Like we are talking, store of value is 500 trillion and medium of exchange is 3 trillion, maybe 2 trillion, maybe 5, like whatever, like a very small amount of money compared to what store of value is. So the most important thing is to keep the properties of Bitcoin that are decentralized, secure, scarce, all of those things. This is the foundation of it. It getting faster around the network. This is something Lightning can fix. This is something else can fix. But the valuable thing is that it is not changing and that it is secure and decentralized. And I think this is this is probably the main thing that altcoin people usually don't get. Like, like we try to improve like on this one small thing, that doesn't really even matter for overall money to be adopted.
Yeah, 100%. People hyper focus on these perceived utilities, forgetting that most money, most of the time, is doing nothing. It's just sitting there. This is one thing that that kind of Keynesians sort of get half right, which is that there is a relationship between the velocity, right, and how much money that you need to satisfy a certain use case. So if you have extreme velocity, you don't need a ton of value to help that all go around. It's the low velocity uses that actually drives the most value into the actual unit itself, right? It's when people sit on money and don't do anything with it. That's when it's holding the value itself. Even most regular money sits still like 99.9% of the time. Like even the money in your account, it mostly just sits there. And then from time to time, you do a transaction, right? I'm completely with you on this. Optimizing for people wanting to store value over time, that is the main value driver into Bitcoin. That is what we need to focus on, and eroding that in any way by chipping away at the monetary properties like you would if you had perpetual inflation is not worth even tinkering with. Like I would suggest we never mess with the monetary policy of Bitcoin whatsoever. We've already seen what happens to Ethereum. They change the monetary policy all the time. It hasn't worked out for them. We need to make sure that we don't fall for the temptation of trying to perceive this as an engineering problem instead of a market outcome. And the market outcome that we want is the one that's going to come from the strongest possible monetary properties.
100% it's been such a pleasure talking with you again. It's really cool. I have one question that I ask each and every one of my returning guests, actually. And the question is, what have you learned outside of Bitcoin since your last appearance?
Outside of Bitcoin?
Oh, yeah. This is always this is also the part that Bitcoiners don't like.
There's an outside of Bitcoin?
There's a life, like what the heck? What are you speaking about?
Yeah, what have I learned? I haven't probably haven't done a good enough job like upskilling in my life in general. I think last time I answered this that I had become quite good at cooking broth. That I seem to remember that. I think it was you and me who talked about that. But actually, okay, yeah. I've gotten really good at cooking sauce. I would say I've gotten really good at cooking sauce, and I would say that I've upskilled quite a bit in cooking steak on my grill, which I wasn't very good at before, but I've gotten quite good at now, and combining that with good sauce. So I have upskilled in cooking. I would say that. I also read a bunch, but it's mainly theology. So I don't know how interested people would be in that, but I'm on a perpetual metaphysical search. So I've spent a lot of time reading about that. I've gotten marginally better at meditation. So
meditation is so freaking hard for me, man. I know it's so hard. I know it's so important and so good for the doing it. But what I usually do is like, if I really want to do it, I just like go outside and walk, like
yeah,
with nothing, like just like walking, because it's super hard for me to just like sit and do nothing. Like that is probably the hardest thing for me to do in general, like just like sitting there and doing nothing. I can I can work a lot, I can do a lot, but like sitting and doing nothing, like I struggle with that, man.
100%. And clearing your mind is a skill. Just trying to remove your thoughts and focus only on sensation is very interesting. And it's a good exercise to just sit down, even if you're outside and you're walking. You can get into autopilot, right, when you're walking, and then just try to focus only on your senses, what you're hearing, and try to get your ears to provide like the dominant, what do you want to call it, the dominant mental image that you're experiencing, and see if you can smell things. You know, I live in a city where I don't smell much, you know, and when I do, it's not pleasant. And just getting more in touch with the senses, I think, is important as well. Yeah, dude, learning how to clear your mind, I think it's great. It helps me keep things straight. And you know, if your thoughts race too much, it's exhausting. You're gonna burn your brain out eventually.
I 100% agree, man. Yeah, it's so funny. It reminded me because like it's like there's those cities where you go through and you're like, I don't want to even smell that one.
Yeah.
We have an end routine, as you know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what's something that you believe in strongly, but most Bitcoiners would disagree with?
Wow. That most Bitcoiners would disagree with. Well, it's hard too, but it's because there's an enormous selection bias here in what I'm going to consider to be most Bitcoiners, because most Bitcoiners that I have in my kind of group of people that I consider Bitcoiners are vocal Bitcoiners that are very passionate about it. And I guess this wouldn't be so much like people who use or own Bitcoin, but people that see themselves and identify quite a lot with like the Bitcoin ethos, right? So, something that they would disagree with, maybe that sometimes it is appropriate for a cooperative societal unit to provide things for group members based on combined effort. So it's like almost, you know, it's like socialism light, but based on explicit agreement that is something that you enter into as a group. So basically, it's like there could be a role for a state-like entity, but with the caveat that people have to explicitly agree to be in it. And once you have an entity like that, it might be appropriate for that entity to provide certain insurance for everyone. Maybe a lot of Bitcoiners would disagree with that, but yeah, basically, it's like if you're in a voluntary state-like organization, it could be appropriate for that organization to provide something like health insurance for everyone, or accident insurance, or something like that.
There could be that people disagree with that. I don't know.
Yeah,
I kind of
I'm
agree
not
with
sure.
it.
Yeah, maybe. I know a bunch of Bitcoiners that would disagree with that and would have the point of view that individuals should fend for themselves, and the family unit and charities are more appropriate for this type of safety net provision. But yeah. I think there could be a role for organizations like that, so long as you enter into them voluntarily and can exit them voluntarily.
Yeah, especially if they're no brainer for that, especially if they're voluntary even. Man, thank you so much for being on. Before I let you go, where can people find you and ask you questions?
You can find me on Twitter. So you'll find me as C_Bendiksen. Happy to chat on Twitter.
Awesome. Thank you so much for being on, man. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.